financial success is just having really strong financial well-being, being comfortable with my money and where it's going and understanding it. The biggest advice that I can give is just to plan as much as possible. The biggest mistakes I've made in terms of finances is not planning.
I'm suggesting the best way to do that is put good people around you, so experts, but also people that you can rely and trust on, because it's a high trust thing.
I've seen what's worked well and what hasn't worked well. Most of the time, what's worked well is they've been willing to invest in other people to help them. I'm passionate about 3 areas that you need to make sure that are protected. So number 1 is protect the family.
Everyone who follows my content knows that I'm really focused on answering that question that a lot of us have, especially a lot of us under 40, and that is, how do I actually make it financially? How do I buy a house? How do I make money? How do I pay for my kids? How do I retire in comfort? And I get a lot of people wanting to borrow money. So they're wanting to go on the offense and kind of invest and do all these crazy things. The one thing I see people not do is think about how they protect themselves. How do they defend first? And I love sport. And when you're thinking about sporting analogies, all of the great teams, they defend first. Then they're good at attacking also. But this is what you do, right? You're the protection advice man. Let's talk about protection.
Yeah, sure. Absolutely. Yeah. First of all, give you the background. I specialize in wealth protection. Typically what that means is your life insurance and income protection. I'm a financial advisor that specializes in that space. What we typically see is, unfortunately, that as Australians in particular, we do have a cultural environment where we put defense on the back burner. We love to obviously, shut things up, go and invest and spend money and buy a home and all that sort of stuff. But often, and too often, we see that putting in place a protection plan is the last priority. It's something that people generally do recognize they need and that is important, but it's also down the to-do list, I guess. It's a one-day scenario. So but for me, it's about providing peace of mind. So you talked about, building wealth and building financial success. For me, financial success is just having really strong financial well-being, being comfortable with my money and where it's going and understanding it. And a big part of that is protecting it as well. So that's why I'm really passionate about it.
We're going to talk about 3 different ways you can protect yourself later on. I like to understand really the learning experiences out of your personal journey on kind of making it financially. We're all at different stages. And I think it's one thing financial professionals can actually give to other people rather than just kind of specifically product kind of stuff. I think the experience thing is not something that comes across very often. So give us the rundown of kind of who you are and where you've come from.
So I'm financial advisor, have been for over a decade. So I now run Vivi Protection Advice. We specialize obviously in the personal protection side, but prior to that, I was holistic financial advisor in a few different businesses. So in large insurance company AIA, as well as at the Commonwealth Bank, and started out way back at a boutique financial planning business. So I've worked across a broad spectrum of clients. I've helped everyone from 21-year-olds starting out through to people, well into retirement, a lot of pre-retirement sort of space assistance as well. Even worked with small business owners a lot as well. So quite a broad range of clients that I've worked with in that time. And I guess what led me to this path where I am now is where I'm working in the protection side is, I guess I saw a space where there's a lot of people similar age to myself. So I guess to give you my background, I've got 3 young kids under 5, so I'm things are pretty hectic for me with my beautiful wife. Obviously, it's pretty crazy. So what I saw though is a lot of people in that space who maybe have, taken care of things around their superannuation. A lot more people now are a lot more aware of what they're doing with super and investing and their budget, but still this space of protection was not being considered. So that's really, I guess, where I saw that opportunity to really work with people, predominantly sort of families in that sort of 30s, 40s, late 20s kind of age range, where unfortunately in Australia, we now, I've got a big mortgage and I'm sure like most people, we've got big mortgages because we've had to spend a lot of money to buy a house, and that leaves us really vulnerable. So that's, I guess, where my passion has come is to help people like me who are in the same position as that. And in terms of, I guess, financial experience, for me, the biggest advice that I can give is just to plan as much as possible. The biggest mistakes I've made in terms of finances is not planning. Even as a financial advisor, you can make that mistake. The more you plan and have your financial house in order, the greater your financial well-being, the greater, and which then leads to better outcomes around mental and physical well-being as well. That's why I'm really passionate about it.
The planning thing, I agree on, but I look at it in like a recent theme that I've been thinking of is just putting the right people around you. We're actually making these decisions, whether we're ignorant of something like insurance or protection stuff or not.
Yeah.
We're making a decision to ignore it. And that's actually kind of sticking your head in the sand, really, in my opinion. If you're actively seeking out that question of how do I make it financially, and I would argue a large percentage of us are, we're not all loaded. I'm suggesting the best way to do that is put good people around you, so experts, but also people that you can rely and trust on, because it's a high trust thing when you're doing this stuff. And what a lot of people do, if they're not putting their head in the sand, what they actually try and do, especially millennials are great at this. They're good at trying to find all of the information and then try and figure it out themselves. And it's just too difficult. There's a reason experts exist, and you should put those good people around you, and that'll help you plan.
Totally agree. And I guess one thing that I do have experience with, because I've worked with such a broad range of clients over the years, I've seen what's worked well and what hasn't worked well. And always, when I meet people who are later on in life, most of the time, what's worked well is they've been willing to invest in other people to help them. And they've been willing to invest money to help them, get those resources around them. So sometimes getting a professional might cost more, but it's the value in the long term is significant. And from my experience, I totally agree with you. Working with people who are willing to do that generally have had much better outcomes.
All right, we're going to jump into the 3 ways to protect yourself, starting with protecting your family.
Yeah, that's right. So I guess when I'm looking at my customer's personal situation, my job is to work out where the gaps are. And so I'm really passionate about 3 areas that you need to make sure that are protected. So number 1 is protect the family. Most important for I'm pretty sure 99% of the audience, if you haven't family, that's what's critical. So what that involves is really 2 things, and that's having a proper life protection policy in place, so that if you pass away, your family is able to pay off your debt and cover your funeral costs and cover their lifestyle moving forward. So if I put myself as the example, I've got 3 young kids, and if I suddenly cannot provide an income for them, it's going to be very difficult for my wife. So it's critically important to me that if something happens to me, and it does happen, unfortunately, even to young people, then they're protected and looked after. So that's number 1, first priority. I guess the way to do that is to obviously fund that through life insurance. And, I help people structure that either through super, outside super, whatever the most appropriate way is. And the other thing is that most people don't do is have a will in place. It's something that just don't see many people do. Almost every client I see doesn't have a will or a power of attorney in place, have some estate planning in structures. And what you do if you don't have a will in place is you leave chaos. You leave chaos for your significant other or for your family, whoever you're leaving behind. So those are always 2 things that very first step, that's number 1 that I look after.
Yeah, a will. From my experience, a will can be chaos, not myself, but an actual will. Split families, you got kids to different parents and different relationships and all of that sort of stuff going on. It can be a mess if something happens. Getting back to the life insurance, there are differences, because I have a lot of clients that come to me, right, and I ask them, all right, have you got your insurances? And they're like, oh, yeah, we've got our life insurance through your super. Just explain why, just because someone's got a policy, it doesn't necessarily mean that that's the policy that suits them. I guess you could explain it that most car insurance policies are kind of similar through your normal guys, but it's not really the same with this sort of stuff. Actually, it's really important that kind of this stuff gets done right.
Absolutely. So typically what we see is people have what's called default insurance in their super. And that is basically the insurance you were given when you first sign up for your superannuation fund. Now, these policies, the way they work is they're based on your age. They just give you a fixed amount. And that amount actually, it goes up to your mid-30s and then usually starts reducing after that. For sort of typical 35-year-old with an industry fund, for example, that life insurance default cover is generally less than 200,000 on average. So the people will always say to me, oh, I've got life insurance in my super. And then we go look at the policy. We say, yep, that's the policy you got given. And it's 180 grand. Like that's pretty much what it always is, around that kind of figure. And then you've got to ask yourself, okay, is $180,000 enough if you pass away? And we're talking to people who have got $500,000, $600,000, $700,000, maybe more mortgages. It's obviously not enough. So that's the first thing. There are also nuances within those policies around some of the terms that it's important to know about. And that's probably where you need to be talking to an expert. What I say then is, okay, at that point, you've got two choices though. You haven't got enough, clearly. We both know that. And the client agrees to that. So you have the choice then. You can go direct to the super fund and set up a policy, or you can speak to a professional who can put in place the right policy for you. And that may still involve using super, but not necessarily the super fund's product. So we can set up an insurance policy direct with an insurer themselves, but have the super fund still pay for it. There's lots of options out there, but if you're just relying on what you've got now, you're probably underinsured. And then the next step is, okay, well, what's the best option from there? The best option is to get advice, like you said before. And it doesn't have to be expensive. That can be, very affordable.
Protecting your lifestyle?
Protecting your lifestyle, yeah. The next point that I sort of look to, so obviously, we protect the family first, and then the next thing is still protecting the family, but protecting the lifestyle. So most people I work with are probably in that sort of late 20s, 30s, 40s kind of age range. They've built a career. They've started to build a house. They've started to build a family. You've worked really hard to get to this point. And then one thing happens and it can all just fall over. So that's why income protection is so critical. So income protection can cover up to 70% generally of your income if you can't work, and it will cover you until you return to work or the benefit period of the policy. So without doubt, the most important policy, right? If something happens to you and you're out of work for 6 months, most people are going to financially struggle in that scenario. It's so critical to have that cover.
Yeah, 100%. And later on, I'm going to touch on that on kind of one of the big things that I see people not do when it comes to their finances. And obviously it's not income protection because I don't do that.
Yeah.
That's what you're here for, Scott.
Yeah.
But I'm going to comment on a thing that people can do to protect themselves even more.
So the third one is wellbeing. I guess just before I do go on with the income protection, and it's the same thing for the super, what we typically see with people who have already got income protection through super is it only covers you for 2 years. That's like insuring the wheels on your car and not the rest of the car, because if you're out of action for longer than 2 years, what are you going to do for income? So generally what we look at is income protection is a benefit period that covers you all the way through to your retirement. So that's a really critical point. Again, if you've got it through your super, have a look at what you're actually covered for, because there's a good chance that it's not actually covering you for much at all. Next one though, we'll move on, is protect your wellbeing. So protecting your wellbeing is the third theme that I sort of explore with clients, and that making sure that if they suffer some sort of major event, that they're still able to fund their medical costs and fund their lifestyle. So that's really looking at using trauma or critical illness cover. It's a policy that most people haven't heard too much about, but it's actually behind income protection, the most claimed on policy. So that's if you're diagnosed with a cancer, heart attack, stroke, you want to make sure that you're able to pay your bills, but pay your medical costs. So significant medical costs that come with that, and also, support your lifestyle for a period of time. So critically important. So I guess just to give you an example of that one, a recent claim with a colleague of mine where the husband was diagnosed with cancer. He was able to claim his income protection, but what trauma allowed was his wife to, first of all, for him to pay for the medical treatment, significant medical treatment. He was in hospital for 18 months. She was able to drive to hospital every single day. She was able to take time off work. She was able to pay for, her coffee, her lunch, her dinner, her parking, the tolls to get to the hospital because it's a 30-minute drive away, all the costs that come with that. Whereas if she didn't have that cover, she's at work every day. And he's sitting in the hospital by himself trying to get better, and she's at work every day. So that's the difference, critical illness cover allows you. It allows you to take care of your well-being at a time of great stress. And so, yeah, it's why I'm really passionate about trauma in particular.
That was summed up really, really well. those three topics. When it comes to people protecting themselves, I see a very obvious one. No one actually understands what they're doing wrong. And that simply is just not having enough cash on board.
Yep.
In case something happens. I know we live in 2023 and there's all sorts of stuff to spend money on, but at the end of the day, if you've got, $5,000 in your account, 10 grand in your account, it's not really enough if you've got a standard home loan these days, especially if you've got a family. That is the number one thing that I see people doing wrong, because if you don't have the cash and you put into hardship, it doesn't look good on your credit file if you start slipping down and you're not paying stuff. But what a lot of people end up doing is they start getting personal loans. They start trying to get debt on debt. And I see it, right? Because I see people at all these different stages of their life. So I see them at the start when they're, maybe it's a first homeowner buying a house and land. And then I'll see them once the house is completed. Maybe there's another 40 grand worth of stuff to do on the house because it wasn't budgeted for. Now they're in the $40,000 personal loan. Maybe the rates go up 4% in a year or however much it was. It happens very easily. So whilst not having enough cash on you sounds like it's too easy, actually, I can guarantee you for most people, most clients around my area, that is one of their biggest problems straight off. They just don't know how to get enough cash. I've got the same thing, right? You've got the same thing. You've got family. Everyone's got some money to spend somewhere. Yeah. But at the end of the day, if you can't have a little cash buffer away, then you've got to ask yourself the question, how do I live that life? And how do I make it financially if I can't even do kind of one of the first steps right? I don't want to talk about budgeting or anything like that because it puts me to sleep straight away. Yeah. But for your average kind of person who hasn't got that much money in their account and they're just living month to month, I would suggest you set yourself a target of having 3 months cash in your account. And then I prefer my kind of safe range is 6 months worth of living expenses, including the mortgage payment in your account, for you to feel comfortable. That way, if anything happens, even if you've got insurance policies or if it's not insurance related, your car might break down or something like that, at least you've got that cash buffer there rather than going backwards and borrowing more. And that cash buffer can always be offset as well. So you're getting a double benefit. You're kind of paying off your home loan at the same time. So that's my thing. It's very simple, but more people need to pay attention.
No, absolutely. I think that ties into financial well-being, doesn't it? And it gives you greater peace of mind. And I think that's certainly the theme of today's chat is gaining that financial peace of mind when I've been in both situations, and it's, when you've got that buffer, you live with much more peace. You're much more comfortable, you're happier. And it also frees you up though. It gives you more options to then look at how to use your money. And whereas if you're constantly on the hamster wheel, constantly chasing, constantly behind, it's pretty hard to do things like get professionals involved to help you. So it's a great tip and very important.
100%. Scott, thank you so much for jumping on with me today. If people want to reach you, how do they do that?
So the business is called Vivi Protection Advice, VIVI. So we're on Instagram, like yourself, Will, doing quite a few videos on there. So you can jump on there and check that out. But otherwise, you can just contact me at scott@viviprotectionadvice.com.au or the website is also viviprotectionadvice.com.au, and all the details are there. And reach out. Happy to chat, just have an initial conversation just about your protection needs and where we can help. And it's Australia-wide. So, we do all the meetings virtually.
Yeah, 100%. Like just reach out, guys, because at the end of the day, I know how this sort of stuff goes. Because I've been doing this for a long time, and if you don't decide you're just going to pick up the phone and start figuring it out, it doesn't get figured out. Unfortunately, you don't want to be in an event in the future where you think back and you just thought, oh, maybe I should have done something about this earlier. Yeah. Thanks for having us on.
Thanks so much, Phil. Thanks for having me.